following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Friday night here in Asia, Friday morning in the U.S. Let's take a look immediately at the S&Ps. We're looking at our E-signal charts here. We're going to pop up our daily chart. And we talked about there's really no significant reasons to really get on the short side yet until we have some confirmations that's still the case. And to be honest with you, this kind of churning up here near the highs is not very promising for this thing to back off hard here. We had a little bit of a pullback, yesterday, and then the bulls took over again. So I know you don't want to have me tell you what has happened. You want to know what's going to happen. So, and I'm with you on that. We talked about trying to get back down below some areas to short here. Namely, this was the 2119, 2020 area. Got a little bit below there. Had some promise here on the short side. But again, this is what stops are for. And as we look at this, you have to take the medicine even on the short term here. We had a pretty good, powerful move up into the top of this fair auction of the 240 minute. Now we're just kind of consolidating above. So had a little bit of a reason to try to get on the short side yesterday. That was very short-lived. And again, we're always trying to take the stance of lose a little, lose a little, lose a little, make a lot. And we could have made a lot here, but we had to lose a little. So that's the way that works on the S&Ps. And, we've been looking at our breadth indicator. By the way, I'm going to show you something pretty cool that I know Tommy's been waiting on. And we got a user password login for this scanner. So we're going to be working with the TFNN crew heavily now to try to get this out Tuesday. Not promising Tuesday, but I think by Wednesday, I think we can have some things wrapped up. So it's got a lot of unique information in it. One of them is the breadth situation that I've been looking at to try to trade the S&Ps and trying to, make sense. Is the leverage on the long side here? Is it worth it to get long? And we've kind of been assessing, especially in this climb up, that it was okay to pass on some of this, but we want to take a look at some of the information here. As it stands right now, I'm going to type in this, gratefully type this in. It's so nice to type this in. Here we go. I'm going to hit sign in, and it's loading, and we're going to see some new features here and final features. And we're going to get right to what we're trying to across here in the S&Ps and the breadth situation. As you can see, the breadth has gotten a little bit stronger. Weekly, daily, 240, 60 kind of all spin off to the long side here. But, again, these pullbacks like happened yesterday, and we're looking at the short-term view, or the day before yesterday and some of yesterday. The short-term view is all we have to kind of lean on. The longer term, the weekly and the daily, which a lot of our automated systems rely on, you just don't have the profiles up here to really kind of dig in and start chomping at the bit on the short side. So that's just not happened, and I don't feel comfortable going long up here. So it's somewhat of a no trade even after we get stopped out of these 240s like yesterday. So let's move on to the dollar situation. Again, I'm still a big fan of this, waiting patiently to kind of leverage and get back above 95.50. Get back in the game on the long side on the U.S. dollar, but we could be in store for a little bit of a range here. So kind of, make sure you put your stops in. The euro, as we look at this on a relative scale, that we got back into these weekly unfair lows after we had kind of hit that 115 neighborhood up top. It's okay to get back in the water on the short side. We talked about that. I did a whole Bloomberg brief on this, but remember, these weekly inflection points are pretty powerful. The thing I like about this is we're nowhere near trying to get momentum and cross zero on our long-term navigator above zero line. And I love how we're kind of just rattling around in this DMZ down here between one, can I say this? 111.65. Figured out how to say it right. And those weekly unfair lows around 111. So we're kind of in no man's land here. We're just kind of rattling around. This is the kind of action I really like to see for a continuation. These dailies are pretty to the tick a lot of times. So again, I'm looking for this to head lower, and you get some pretty deep confirmations below 111 on the euro again. Move pretty fast, pretty quickly, and we may have to kind of build some cause, as Tom would say, before we start making any more new legs down on this. So kind of, be prepared for that. Let's take a look at the Australian dollar. This has been something I've been really excited to get back on the short side when it's possible. This is the weekly. We knew we had to get below this big inflection point up top around 78.94, rounded off. Looks like we're getting there now. 78, whatever, 85 is where. Didn't mean to say whatever. I couldn't read the screen there. And the dailies look very, very similar to the euro. If you kind of put the euro in your mind and look at the daily here, I love how this made a big move down. It's not one to kind of do a snapback rally. It's one to kind of gather itself. Positions changing hands, and it looks like we may be in store for another leg down. And that's what that weekly unfair high and that daily unfair low are at the same level, 78.94 and 78.94. Wow. So again, you love to see this stay below. Stops can be oriented above based on your appetite for risk. And I love this as a short. Let's take a look at the yen. We talked about the 121 target area. Why? Those are the weekly unfair highs. Here we go. We talked about waiting for a Friday close now. That's going to be super important above or below the 121 area. We're kind of sitting right on it right now. Let's see, we're trading 120.93. So again, we've been a little higher than that. We backed off. To me, it looks like it's holding up pretty well. And again, I can't really make any blanket statements yet until we have a close today. So again, remember, we hit the targets. We talked about waiting patiently, sitting on our hands a little bit here, and that's still what we kind of have to do on the end. All right, we're going to move over to gold really quick. I really want to take a look at the Shanghai first, though, man. This thing just lost its mind the past couple of days. And I've really gotten in the habit of watching Bloomberg Asia over here. And obviously they're somewhat interested in this index. And this is why you don't short the Shanghai. And these profiles appearing below on our long-term weekly, this is why you just don't even think about that. This thing can blow your head off. And when these Asian indices, get going in one direction, they just do things that are almost unheard of in the U.S. So we talked about trying to find buy points. There was a buy point. Didn't have anything really to hang on to here. When we got up here, we tried this, and then you could try it again, and look what happened. So, again, a good primer on why to not short these indices when that weekly profile appears below. You're still looking to bang this thing on the long side. Here's the 240s on this. This has been a great trade regulator, if you will, and using the 240s and the dailies because you have nothing to look at on the weeklies has been a very, very nice situation for this. The DAX, I don't know if you guys have been looking at this. This has had the best week it's had, I think, since January, I want to say. Is that right? No. I haven't done the math on that, so I cannot confirm that. That's my mistake. Here's the daily on the DAX. And we're trying to get our chart to snap back here. Okay, there we go. Obviously, this 11,430 area was something to pay attention to. We never got any weekly closes below there, but, what do you do with it now? We're right in the middle of a balanced area, if you will, in the DAX. Here's the 240 situation. There's nothing to glean any hope off the dailies. And, interesting on the dailies, let me go back to that on the DAX, is we haven't, in the middle of this, we'll usually, in a big upturn, or excuse me, in a big reversal like that's kind of happened this past week, you're normally going to see some orange bars, some new profiles appearing, some new leverage points to take advantage of. That hasn't happened. So it's interesting that that's the case. And I'm looking at the DAX now. We've got supply up here on the 240s, and I'm looking at it like there may be a little bit of a shorting opportunity now with stops above 11,893. Could take a little bit of a ride down here, at least to 11,740. And maybe even lower on this. I'm still not convinced that the DAX has kind of gotten its head above water and cleared all the congestion. So maybe a trading opportunity there on the DAX. And another index, a lot of people in Asia strictly trade the Nikkei, the topics. And some guys were asking me today about shorting this thing, and I just think that's a very losing proposition based on, where I think the yen's going to go, or at least hang out at. So, again, we talked about trying to go long the Nikkei and long the yen and trying to find reasons. We had that breakout and go back and retest. The good news is I think the short side can be completely blocked out. Here's the weekly. Here's that 20,000 area. Let's just call it rounded off, clean and clear above there. Here's the 240s on the Nikkei. I don't see this thing stopping, and I see the devaluation of the yen happening. I see this thing repricing itself. Let's take a look at the NASDAQ really quick. Just give some numbers out on this. Here's the 240s. These are your short-term numbers. Profile appearing below. That's pretty bullish. Just like the S&Ps, can't really get back on the short side yet. And on this one, you really kind of need to sit tight on this one too. All right, we're going to just start looking at gold here. And yesterday, we're going to look at silver too really quick. Yesterday, I was talking about on the show, this was pre-market here, that gold was looking a little bit heavy. And then, after, even though we're on this inflection point here on the daily and for lows, we hit a low of about 1,200, and I'd put something in the den right towards the end of the show. Said, yeah, just looked kind of heavy to me. That's where we were trading 1,201. I hear the music. We're going to be right back, guys.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We're going to take a look at gold here just to kind of run through my thoughts that were happening yesterday. We talked pretty religiously that gold was going to, in my opinion, just stay within a balanced area. This is kind of where we're at on our weeklies. And we talked about, it's just, it's going to be some tough sailing either way until we just clear some of this congestion that we've been in. Seemingly, if you just kind of go back in time and, this is, let's just kind of look back at this. And we had one kind of glimmer of hope on the long side. I got pretty excited about that. And hold on just a second. And as we had climbed above that 1232 area, that's kind of the same similar area we're at right now. I got kind of excited about that. I thought we were going to have some new profiles appear to edge a little higher. And as we had, pulled back and just kind of lost hope there on our weeklies, we had our dailies kind of regulate this out a little bit quicker so we didn't, lose all our profits there. But, we've just kind of been churning around here, and it just, I don't know if there's any end in sight here. I'm a little bit more partial towards the long side than the short side in gold in general. But as we look at this and drill down into the dailies yesterday, I think I was just kind of saying, we really need to kind of get out of the 1230 or down below the 1171 area. Are there trading opportunities in between? Yes. I don't see this thing racing back to the highs. It's great that we found support for some longs here around this 1205 area. But again, I'm not getting real excited about any moves one way or the other until we break out of that weekly profile. Silver, on the other hand, we talked about this as a little bit more attractive situation than gold because silver has shown some relative strength lately, and it kind of closed above, gone back and retest, and we had a little bit more retest than we wanted to this week. But we may have a Friday close here that's above our weekly unfair highs, and it's really nice situation that we've got these, dailies that have kind of appeared here to kind of give a little bit more support to go higher. So again, silver a little bit more attractive looking than gold to me, but both of them are, silver's got to close above this 17-18 area, and that would be a really good reason to start looking at this from long side again and putting stops down below there. Now, we haven't been sitting on our hands on silver. We had caught some really good bids down here. We've been talking about around 1562. As you can see, we waited patiently until silver came down to this area. Ultimately, we talked about targets here. I did not think silver was going to breach this, but, that's great. We kind of were able to wait patiently after the targets were reached, got that close above. We're able to try some things. Maybe some folks got stopped out on this, but it's okay to get back in the water if we breach those again. But, the good news is we have caught a really good bid on silver at 1562 down here previously. All right, I'm trying to get my E-signal to work here. Here we go. This is something, if you've been watching the show, I just was really, really happy to see this develop like this. This is new crop beans, November beans that closed below, go back and retest the 940.42 area. And on the dailies, we had that nice similar neighborhood, 940 on the weeklies, 942.5 on the dailies, and we got down below and we went back and retested, and that was just ultra cool. That's exactly what you want to see. Those are high probability setups, and you really can't ask for more. And we've kind of been talking about November beans getting down into the $8 and some change a bushel area. I'm still going to stand by that, but guess what? You gotta not give it all back, let things rally in your face, and we're just going to have to let new information appear on this bean trade. Long-term traders can put stops above 942 based on their appetite for risk, but a little bit more shorter-term to intermediate-term traders are going to have to, use these profiles on our dailies and 240s now being. And this is all in our scanner. If you want to kind of get these levels, please get a demo of this thing. This thing is just rocking and rolling now. Let me go to our futures. Really cool features in this version. And thanks for waiting. Here's beans. Got that on the, these are July beans we got here. We've got the front month. Excuse me. We're going to look at our charts here, and we will change this to November beans if you guys want that. But we're going to talk about beans a little bit more when we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were taking a look at November beans, and I just totally forgot we were always showing front month futures on the scanner, and I was referencing that. We definitely are showing July soybeans, not November beans. So I'm looking at November beans because a lot of people love to trade November beans. I don't know about love, but I like to trade November beans. And here's 924.5 new unfair highs on November beans on the 240s, and a breach of there would kind of be like a trailing stop relative to the profiles. So that's the situation on November beans. If you want to take a look at July beans, we can. Please throw it out in the den, or you guys call into the show, and I'm going to grab those numbers in just a little bit. And I always forget to give those numbers, and TFNN always yells at me for not doing that. So, or at least Al yells at me. And that's the last person that we want to yell at us. Here we go. Let's take a look at, yes. Oh, it's Friday night here, guys. Ooh. All right, let's take a look at December corn. And as we look at December corn, we're going to just kind of take note of what's happened this week. And I've been a big fan of this going into the $3 area. I hear you, John from Philadelphia. It's been you know what? It's been a very satisfying week on many levels. I love getting projects out the door. We got 2 or 3 of them out the door this week, and you know, it's we actually have Memorial Day on the on Monday, right? So you guys are looking to kind of sew up the books here and hopefully get out of town yourself or mow the grass or do something fun. So let's take a look at corn here. We talked about corn getting down into the $3 range, and I'm actually, with beans, in my opinion, getting below 850. In my opinion, the possibility of that. I thought corn could get in the 350 range. I'm still going to stick by that, but we've got a new weekly profile, which is really cool. We had that orange bar appear, then we had the output on the algorithm, and the new leverage point on the short side is 391.5. All right, so that's kind of what I'm looking for. We reached a high this week of 388.5, so we hadn't quite got there yet, but that will be not to back up the truck short signal, but something to pay attention to. Let's take a look on the dailies here. So remember that 391.5 area, 391 3/4 is coupled with that 390.25 area on the dailies. So, you probably should be looking at this as a possible stop out right now if you're just being stingy, just like you were there before. You just hope that we can get back up into those DMZ type neighborhoods way up there, excuse me. Yeah, I mean, John, I was kind of bullish on beans back, when we were like 10.5, 11, and there were some things that started happening, and I just got really bearish on them. I mean, the technicals changed a little bit. I started talking to my buddies at some of the elevators, which I try not to do and try not to let it skew my judgment. But, it just started kind of all things pointing to lower prices in these grains. And, the dollar helped that without a question. But the dollar pulling back, I mean, it's almost like they're showing their hand even more. I don't know. It's just doesn't look good. I mean, obviously weather scares could turn this thing around severely, but that's when I'm 850s in my mind too, and usually they overshoot. But again, use the stops. One of the coolest ways to trade grains is to use option hedges. I'm a big fan of like shorting a grain and buying the in the money calls. Nothing elaborate, nothing complicated, and just if you've got a long-term view on it, you're not paying a lot for the insurance. Let's just say it rallies in your face on a grain report that you don't really even have to get out of before, which I'm a big fan of getting out of products before reports. You're almost tick for tick on the hedge. You got to have a decent move down, and if you start having those decent moves down in a mousetrap like that, you can start selling premium on the downside to kind of lock in some of the profits. So you kind of turn it into this thing you can massage back and forth. That can get you can get carried away with things like that, but there's some great things that Thinkorswim does for option education. I think a Thinkorswim candidate comes on the TFNN show once a week. Maybe is it once a week, Al? I'm not exactly sure, but no confirmation on that. But as you get into these option spreads, if you will, you really need to understand what the skews and the graphs are on what you're currently in. I mean, that trade that I just spoke about right then really was a riskless situation, but you got to have all the gaps filled, and anything that an option spread can hurt you on, you really need to know about ahead of time, because selling outright premium is, in my opinion, extremely dangerous, and some people are educated to do that by some of these guys who kind of waltz through, and then when you get into some trouble, they're not around, and they're kind of walking on to the next seminar. Just understand what you're getting into on the option side. And I'm I'm generally the bearer of bad news, so I apologize for getting a little down on that one. Here we go. Let's take a look at July crude oil here. And as we wait for our weekly chart to pop up, it's nice how this works out. I've been a big fan of still trying to buy the dips on crude oil. Obviously, you had to pass on some longs recently. Let's look at the long-term We got down this week 57.93. Those unfair highs are 57.12. But remember, the daily unfair lows are 57.94. So again, I think we hit those a couple of days ago, low 57.93, almost to the tick. And that was the top of the DMZ. Now, we always talk about, when we have these dual time frames lining up and these inflection points in the same neighborhood being kind of neighborly, you can start an accumulation type situation in those DMZs. And obviously you want to have an uncle point, and the uncle point on a trade like this to kind of continue the notion that, again, crude oil is trading above weekly profiles. Therefore, we still want to look at this, except for, when we get down into, let me back up for a second. We want to be prudent about staying long all the time above these profiles. We want to let the dailies kind of guide us a little bit. Remember, we kind of look at the next time frame over, kind of ratchet the trade a little bit. But as we get down into another really good buying opportunity at the top of that DMZ, the 57.94 down to 57.12, that's where we have a decent trading opportunity. And where's the targets on stuff like that is the top of the box, right? And, you could use, the automated strategies have target-rich environments always on the other side of the box initially, but you can look at the 240s also as kind of a stop-out situation. So now we're breaching below these 240s. We've hit a target up top, the daily unfair highs, and we've got another little bit of a buy point there. But remember, we're in the middle of a fair auction on the daily. We're not really near any inflection points right now. So this particular trade would probably be a devotion of less contracts and just a day trade type environment on this. And if you heard all the coughing, my assistant is it's got dengue fever or something. I don't know what's going on over here. Dengue fever is nothing to laugh at, by the way. So anyway, that's the situation on crude oil. Let's go down into the XLE just to reference that, because this is something we've been kind of pairing against each other. So isn't that quite nice? All right, so this week we had reasons to kind of maybe take some profits on the XLE lately, but we had this week a new profile appear, and we went down excuse me, and touched, and I may be getting dengue fever too here. We reached the low of 79.28. The bottom of the box is 79.11, so we got right down into that neighborhood. And as we look at this, what do you do now? So as we look at this, what do you do now? So we look at the dailies, and we look at a target up top of 80.87. That's the way I'm looking at this right now, and I'm looking at crude oil that we may drift a little bit higher, but remember, we're in a fair auction on the dailies, but still above the weeklies. And, I think we could turn around and move a little bit higher. It might not happen in the next day or two, but the XLE is still, to me, showing a pretty good relative strength trade there. Let's take a look at a couple of stocks here, follow-ups on some of the things that were after the close yesterday. Actually, let's take a look at John Deere. This is a stock that might have earnings out already. Looks like it. All right. So here's the daily situation. Here's the 88.28 area. Remember, that would kind of turn this into a different situation here. We're still within a big fair auction on the weekly, 85.14 down below. So earnings came out. Street likes them. We've reached a high of 93. Right now we're trading 92.39. So what do you do with this? So right now, I can't remember the price I just said. What was that? 92.32. Here we go. So as we look at this, pre-market, we're trading above this 91.64 area. So I think that's going to be your leverage point on the possibility of the buy support here and John Deere possibly going higher. it hasn't, there's been a lot of worries here about the multinational currency situation. The dollar's come off all-time highs. John Deere really hasn't suffered too much. So, again, I'm looking at 91.64 support on John Deere with stops down below. Let's take a look at HPQ again. This is something from yesterday. And my 60 minutes have just completely disappeared. I don't know why. Huh. Interesting. Well, we'll make a phone call about that. Here we go. The daily's 34.15 pre-market. We get my screen back here. Okay, here we go. All right, so Hewlett-Packard hasn't been the darling of the stock world, and I'm not really convinced that it's going to break out of this range, even though we're sitting up top above these daily profiles right now. I'm a little bit broad market confused right now, and definitely not bullish on the long-term market. So I kind of am not taking this as like a mega breakout on HPQ, and I don't know if this is going to be the stock to just catch on fire. They've got some things ahead of it. Obviously, it has been a stock that is down 25% over the course of the S&P's rallying significantly. And I'm just kind of, if it ain't broke, don't fix it on HPQ. I'm not a big fan of buying HPQ. Let's take a look at Intuit. This was something that happened after the close, and it looks like we're trading 105 pre-market. This is one that, we just talked yesterday about. This is a strong stock without question. You've got some leverage points around 103.10. Still going to stand by that. I love their business model. Those earnings kind of proved it out, but I would have been out before earnings. Don't want to look a gift horse in the mouth on something that's rallied this hard all year into earnings. Let's take a look at the 10-year really quick. We're going to go to break here in about 30 seconds. Just want to reference this. 127.11, interesting. Coming off a little bit right now. We're back down into those weekly unfair lows here. In my opinion, that's a trading opportunity. You've got 127.11 here on the 240s, 127.11 on the weeklies. Remember, you got 127 as kind of below there is kind of Custer's last stance on all this on the 10-year. Make sure you keep that in mind. Make sure you put your stops in, guys. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. All right, we're taking a look at Foot Locker. This is a stock that's going to have earnings pre-market here. I think it's out. Yeah, it's out. Okay, so there's unfair high 63.66, and you know, stocks can never be too high. They can always go to zero on the other side. But as we're looking at Foot Locker, you know, if you'd have taken the attitude that it was too high back in the $30 range, I mean, you basically would be short 34 points against you, maybe 35.5 now pre-market this morning. So again, it's a strong stock. It's been finding support most of the time all the way up. This is our weekly view. Here's the daily situation, and now we're even above there. So, you know, what do you do with this now? If you're trying to scalp it for a couple of points on the short side, you really need some new information to appear up here. And it would be very, very cool for this to get back below 63.66 on the long term before you even start looking at it as a long-term short. I mean, the problem is shorting stocks like this, a lot of people are looking at it as a ripe opportunity, new highs, blah, 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 blah. And, you know, it's a self-fulfilling prophecy for stocks to go up sometimes when quite a few folks are short. So just, you know, they have to buy back before the close of that day. You know the drill. And, you know, it happens on the S&Ps a lot. So watch out for stocks like this. Do you buy it? I think you don't buy it on all-time highs as earnings come out and the thing's gapping up. So I think you kind of leave this alone. If you're going to buy it, you wait for pullbacks into 63.66 right now. Just like the British pound, just like, you know, the reverse of that on the euro. 135.52 that go back and retest. I mean, these are the same, broken record type trades that are high probability situations that I love to get into. So again, wait on Foot Locker. All right, so we're going to take a look at this one. I guess this is a Sakos, Greek. It's the only Greek thing with hope right now. Here we go. So this has got earnings this morning. 934 weekly M for highs. We closed above, went back and retested. It seems like we're trading 1025 pre-market. So here's the daily situation, 934 to 980. I think we've got a collection area on the long side with that. Get this chart out of the way here. Okay. And, again, things on their highs go higher. Earnings, I wouldn't buy it up here just based on the gap up on, I guess, market-loving earnings type situation. You're going to have to wait for it to pull back, and you got that collection area that we just spoke of. Let's go back into some of the Japanese yen. The dollar's rallying. The Japanese yen's getting devalued right now. This is the one we talked about. I thought we were going to pierce 121 and go higher. Again, we met our targets. We had to kind of wait and see where we had a weekly close. I think this particular currency is finally going to get some legs and just move north. 125, in my opinion, might be the next stop. 126 on the yen. Make sure you put your stops in below 121 now. S&Ps are getting hit a little bit here, but the dollar, man, do yourself a favor. Go look at that Bloomberg brief I did. The euro caving in. I love it. Gathered itself, build the cause, heading lower. We'll be back in tomorrow, guys. Tuesday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.